Hello and welcome to our weekly market update. So here is what's going on this week. We have several earning reports coming out. Number one of my favorite stocks in the world, Apple. They are reporting on January 29th, 2019 after market closes. And then on the 30th of January 2019, you have several reports. Number one, Facebook after hours. McDonald's before market opens. Microsoft after market closes. Visa after market closes. Tesla after market closes. And on Thursday, the 31st of January, you have Amazon, another one of my favorites, reporting after hours as well, which basically means after the New York Stock Exchange closes, which is 4 o'clock Eastern Time, -5 GMT. And then in terms of the economy, we have several economic events coming out as well. Number one, Wednesday, the 30th of January 2019, we have crude oil inventories, we have the federal interest rate decisions, and then on Friday, we have our monthly reports, which come out from the United States, known as the NFP, Non Farm Payroll, and the unemployment rate. So let us begin. Number one topic, Apple. Apple is always the hottest thing that goes on in the markets, whether people like it or not. Apple is one of the biggest companies traded worldwide. However, there are several things going on with Apple that you should be aware of. Number one, innovation. Apple hasn't been innovating lately. Obviously, as you guys know, the iPhone 6, the iPhone 6S, the iPhone 7, the iPhone 8, the iPhone 8 Plus, practically the same phone, no difference, literally, except for a better camera. Whoop-de-doo. Next, you have the iPhone X, and then you have the iPhone XS and the XS Plus. Also, no difference, except for the camera and their stupid little face opening the phone thing. Personally, I have an iPhone myself, but doesn't mean anything, right? They haven't been innovating. I am strongly considering changing to Samsung, especially after I saw that Samsung is coming out with their tablet phone, which is quite impressive. It's a foldable tablet. Nobody knows when it's coming out yet, but it's pretty cool. You can Google it. Next, earning reports. Obviously, as you guys know, if you click on financials, Apple is coming out with their earning reports. So let's go to earnings. We can see that Apple is expecting a $4.17 earning per share and a revenue forecast of $84.03 billion. Brief explanation of earning per share, which is EPS. All right, and then revenue, which is basically revenue, as it says. Earning per share. That is an estimate of the amount of money investors have made per share bought of the stock. It's very simple. Revenue, obviously, says it all, the amount of revenue that the company made. So Apple has expected these two numbers. All right. So let us begin with why Apple is not looking so well. If we go into Apple's chart over here, we can see that since November 2nd, 2018, Apple stock took a 30% dip, 29.01 to be precise. Why? Here it is. Business Insider. Apple will no longer report iPhone numbers after growth went to 0. And analysts are now worried iPhone sales may decline. They should worry, because iPhone sales are declining. Literally no difference in every iPhone, no innovation, they're not selling. People would rather just stick to their old phones till Apple comes out with something wow. All right, let's put it that way. Which is why many investors are predicting a short sale for Apple. How do we know that? Let's go back to investing.com. We can click on technical. This is basically technical analysis. It does all the analysis for you. This is hourly. Obviously, when you're trading earning reports, you want to see what's going on in the longer term. So let's click on monthly. We can see that the moving averages on Apple are not so great. It's neutral, 50-50. All right, so a lot of people are kind of lost in the woods in terms of technical indicators, which are everything over here from pivot points to technical indicators, moving averages, the whole shebang. So technical indicators, we can see that there are more sells than buys. Moving averages, we can see 50-50. So that's what it is. So if you ask me, again, I'm not a financial advisor. Not allowed to give you advisory. I'm not giving you advisory. I'm just giving you some tips based on what I'm reading online. Apple doesn't look so good. All right, we're probably going to be seeing a bearish trend after the earning report. Again, probably it's all predictions. Believe me, if I would know what would happen, I'd be a gazillionaire. That's Apple. So let's close Apple. Boom. Amazon, the next earning report. If we look at Amazon, we are expecting Amazon to do fairly well. In terms of moving averages, we got 10 buys over 2. If you go down here, you can see it. Moving average 5 days, 10 days, 20 days, 50 days, 100 and 200 days. Practically all buys. 5 days sell. You know, sometimes stocks tend to go down a little bit because of a small little sell-off. Doesn't mean anything. Next, technical indicators. All technical indicators from RSI to stochastic RSI, etc., 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 are showing buys. All right, so that's that. Now, why is Amazon expected to be a buy? Let's take a look at their earning reports. Their past few earning reports, investors have made a killing. Take a look at their earning per share. Sometimes 2 times more than expected, sometimes 3 times more than expected. Let's take a look at their revenue. Their revenue, not so great, I mean, but it misses expectations by a little bit, you know what I mean? When we're talking about billions of dollars, a few hundred million, doesn't really mean anything. So, they are expected to come out with the report, as I said, on the 31st of January 2019. They are expecting a much bigger report than the previous months. Now, why are we expecting Amazon stock to be positive? Very, very simple. Obviously, you guys know that holiday season just passed by and blew by us. And everybody buys things online today, whether you like it or not. Amazon is the biggest online website in terms of shopping for anything that you need, from household goods to clothes to shoes to nail polish, whatever. It doesn't matter, even for dog food, for crying out loud. All right. So that's what's going on with Amazon. A lot of e-commerce stores online do sell Amazon products with a markup, so there's a lot of sales going on with Amazon. And obviously, if a company is not selling, they're not performing. If a company is selling, they are performing. That's how investors decide what to invest in and what not to invest in, which is what caused Apple stock to go down like crazy. Apple stock went down like crazy because people saw that they're not going to be reporting their iPhone sales, which is kind of scary. I mean, if you're not reporting, how am I supposed to know if I should invest in you or not? All right, that's that. So let's take a look at Amazon's performance. As you can see, Amazon has been performing quite decently. For the past year, the stock is up from $1,417. The all-time peak for the past year was roughly about $621 above that price, which is 43.86%. As you can see, $2,039.51. And that small little decline, which is not really Amazon's fault. This is thanks to Donald Trump, President of the United States. You know, he's tried targeting Amazon, scared the living hell out of a lot of little people. And there was a small little sell-off, but for crying out loud, if you would have made 40%, obviously you would sell as well. And we are expecting a positive earning report based on what we're reading online. That's that. So that's Amazon. Conclusion, looks good. Next, let's talk about the economy. Crude oil inventories. Let's take a look at crude oil inventories. All right, crude oil inventories, give you a small brief explanation on what it is. The Energy Information Administration of America. Crude oil inventories measures the weekly change in the number of barrels of commercial crude oil held by U.S. firms. The level of inventories influence the price of petroleum products, which can have an impact on inflation. Well, let's leave inflation on the side right now. This can also have an impact on actual petroleum stocks like ExxonMobil, BP. You have Gazprom in Russia, you have Rosneft in Russia, you have several companies all over the world. Now, if the increase in crude oil inventories is more than expected, it implies weaker demand and is bearish for crude prices. The same can be said if a decline in inventories is less than expected. So, if the report is positive, which means more oil in inventory, you'll probably see a depreciation in value. If the report is negative, which means less oil in inventory means higher demand, you'll probably see a bullish trend, which is an increase in crude oil value. For those of you who don't know, bearish in terms of market terms means down, bullish means up. It's just terms they use on Wall Street. Bears attack you going downwards, and bulls attack you with their horns. They make you fly to the sky, let's put it that way. So that's crude oil inventories. Very, very good report. You see some swift movements on oil prices. A lot of day traders trade on this. There's a lot of volume during this particular hour. The report comes out at 10:30 GMT. So be ready to trade it if you'd like. Next, you have the United States federal interest rate decision. Now, the United States federal interest rate decision basically means that they will be saying if they are raising interest rates in the United States or not. Since they have been raising the interest rates in 2016, you can see that the US dollar price versus many major currencies has went up. Crying out loud, over here, the pound was trading at roughly 1.4 on the dollar. It's currently trading at 1.28 on the dollar. The euro was trading at 1.3 on the dollar, 1.2 on the dollar. It's currently trading at 1.1 on the dollar, give or take. It's fluctuating. But those are the prices. This report comes out at 1 o'clock GMT. We are expecting a even forecast, as you can see over here. That's what we are expecting. If the report comes out positive, obviously means bullish, up for the US dollar, while if the report comes out negative, you are expecting bearish for the US dollar. It's that simple. Also, you will see quick spikes, so be careful. Next, non-farm payrolls. This report comes out once every month in the United States. The non-farm payroll measures the change in the number of people employed during the previous month, excluding the farming industry, which is why it's called non-farm payrolls. Job creation is the foremost indicator of consumer spending, which accounts for the majority of economic activity. A higher than expected reading should be taken as a positive, bullish for the US dollar, while a lower than expected reading should be taken as negative, bearish for the US dollar. This report does cause a lot of movement for the dollar. Now, pay attention, 312 as opposed to 178K. All right, if you go back to this particular date on the charts, you will see a quick spike on the dollar price. Next, let's go here. United States unemployment rate. This is what really measures what's going on with the U.S. economy. The last report came out on the 4th, comes out the first Friday of every month. And then over here, if we take a look, February 1st, 2019, this coming up Friday, forecast is expected to be 3.8%. Now, with unemployment rates, if the report is lower than expected, you should see a bullish trend. If the report is higher than expected, you should see a bearish trend on the dollar. Why? Now, over here, a lot of people get confused because sometimes you'll see that the non-farm payroll does come out positive and the unemployment rate comes out negative, which is what happened last month on January 4th. Now, if the unemployment rate comes out negative and the non-farm payroll comes out positive, most of the time you will see a quick spike in dollar price, which means the dollar will go up, but the overall trend will be down. So if you take a look at the euro dollar for the past month, you will see that since January 4th, there was a quick spike on that day. The dollar did go up, but the overall trend of the month was down. Why? Because if there's less people employed in a specific country with a 350 million people population, there's obviously going to be a depreciation in value. And but the other way around, if there's more people working, then you're probably going to see that that particular currency is going up because people are spending more. It's that simple. So that's that. Next, to my favorite part, GW Pharmaceuticals. For those of you who don't know, GW Pharmaceuticals is the first company to actually get an FDA-approved, Food and Drug Administration of America approved cannabis oil drug, which is selling with prescriptions to kids who have epilepsy. God forbid, not upon us, not upon our children, not even upon our enemies. All right, may nobody have that. However, this particular company, since the beginning of the year, which is when they basically got their approval, closed 2018 at $97.39, opened 2019 at $101.01. So if you take a look, this stock is up 37.17% since the beginning of the year, which has kind of put me in awe because I haven't seen many stocks perform this way. All right, especially a stock that's not a pink sheet. This is not a pink sheet or over-the-counter stock, guys. This stock trades on the NASDAQ 100. All right, now GW Pharmaceuticals is a British company, which is a pharmaceutical company, which has put a lot of their focus on creating this drug called Epidiolex. Epidiolex is the first FDA-approved drug, which is selling, like I said, on prescriptions, and hopefully, again, these are rumors, not 100%, rumors that insurance companies are going to actually be paying for this particular drug to kids with epilepsy. The drug is costing $32,500 a year per prescription, which means you have a specific amount. I don't know how much is in the drug. Yeah, 100 mil, 1,000 mil, doesn't matter. You obviously give your whoever needs the drug a specific amount every day, and they calculate that throughout the whole year how much you need. So that's that. Now over here we can see 7 reasons why GW Pharmaceuticals Epidiolex will be a big winner. I'm just going to read you the headlines. If you guys want, you can just Google Epidiolex Motley Fool or thefool.com. It will bring you directly to this article. All right, as you can see, RX only, which means it sells over the counter. This is how they take it. You guys can watch some YouTube videos also on how these particular drugs are helping kids with epilepsy. Personally, I don't have the heart to watch it. It hurts me to see something like that. But by all means, if you have the heart for it, you can watch it. So, we are seeing some real world experience. There are, as you can see, videos of people showing that this drug is working. Currently, 2,000 patients are using it. And that's that. There's also a significant unmet need for this particular drug. Many children with epilepsy were taking pills which were killing their liver, and scientists and researchers show that marijuana doesn't actually harm you, especially if you're eating it. If you're smoking it, it's one thing, it causes cancer, but if you're eating it, it doesn't do nothing. So that's that. The drug is actually helping people, thank God. And that's one of the main reasons we are probably going to be seeing this stock fly. Next, a solid commercial team in place and active, which basically means they are going to be targeting and advertising this drug. Next, strong early payer acceptance. People are actually starting to pay for this drug. It's already starting to be prescribed. As you can see over here, right over here, Express Scripts included Epidiolex as a preferred brand and its national formula with no prior authorization required for 22 million of its over 30 million covered lives. So there's 30 million people who can potentially be prescribed to this particular medication. The price is right. Like I said, $32,500 per year's prescription. You can see that over here. That's that. European approvals could be just around the corner. Now, this is my favorite part. In the United States at the present moment, 33 states have legalized the use of medical marijuana, and about half of that have legalized marijuana for recreational use. Now, let's talk about Canada. I mean, in Canada, you can freaking buy marijuana in a vending machine, for crying out loud, and in some states in the United States as well, which is pretty cool. That's driving sales. In Colorado alone, which is a state in the United States, for those of you who don't know, there was a $5.2 billion increase in tax revenue just from marijuana sales in 4 years. That is crazy. Potheads on the rise, guys. Potheads on the rise. But more indications can be on the way soon. All right, if you go through this, approvals, all right, in Dravet syndrome and LGS could just be the beginning for Epidiolex, which means that this drug is only being approved for people with these particular syndromes. All right. There's much more expected to come. You guys can feel free to read this article. I really don't have the time to read the whole thing, but it is pretty cool. The fact that the FDA has approved it and the DEA, Drug Enforcement of America, has actually decriminalized marijuana is a good thing. All right. It's a very good thing. It's going to drive a lot of money into the economy. Hopefully, we'll see marijuana turn into a commodity soon as well. I mean, if tobacco is a commodity and it's killing people, why shouldn't marijuana be a commodity where it's actually healing people naturally? Yeah, with no chemicals or no crap inside of it. It's pretty cool. Obviously, this is a big winner. This is expected to be one of the most performing stocks of 2019. There's another article that you guys can come across by the Motley Fool that actually says that GW Pharmaceuticals could possibly see a 930% increase in sales just because of this particular drug that was FDA approved. All right, you can also watch that 10 best stocks to watch in terms of the marijuana industry. You will have to put your email inside, whatever. Personally, I don't have the patience to do that right now, but generally speaking, that's what's going on in the market. GW Pharmaceutical, guys. Pay attention to the stock. Looks good. Once again, I'm not a financial advisor. This is just some of the homework that I do for myself, which I think I can share. I believe I can share to the public so you guys can enjoy and save yourself time. Instead of doing hours of research, simply watch my videos. Don't forget to click subscribe, hit the bell, and have a wonderful weekend. Cheers.